of exposure to European economists while you were away. So the South African Reserve Bank, they hosted the biennial conference, research conference.
Yes. I saw that you attended that.
Of course.
What were some of the key takeaways that you took from there?
Yeah, there was, I think tying it to this European subject that we're on, the chief economist of the Bank of England was there, Mr. Hugh Pill. And the themes were the same. What I learned, it was the first one, inflation is still high.
Yeah.
And the Bank of England, well, as per Mr. Hugh Pill, is that they are still very much dedicated to bringing inflation down.
Loosely translated, they're still going to raise interest rates.
Yeah. Well, yeah.
Hello, everyone, and welcome to episode 7 of the Investment Kernel podcast.
Episode 7.
My name is Chifiwa. I am the co-host of this podcast, and as always, I don't roll alone. I roll with the tech guy.
Yeah, man.
The ones who made millions from Sasso.
That's always going to be funny, mate. It is always going to be funny.
How are you doing, man?
I'm all right, mate. And you?
I'm good, man. I'm good.
Yeah.
I just came back to Cape Town, and this weather is not it. This is not the spring we ordered.
This is not the spring. I actually heard from someone who's a Cape Town local who says that Cape Town doesn't experience spring. It goes from winter to summer.
That's actually very true.
It's quite true, isn't it?
Yeah, it's actually very true. It's typically still cold in September, so
yeah,
I guess so.
But
I guess they're right.
Man, you've been busy. Fresh from a trip to Europe. Yeah. You've been Euro tripping for the last 2-3 weeks.
Yeah, the last 3 weeks or so. Yeah,
last 3 weeks or so.
Yeah.
Can you please tell us, mate, how was that? Any reflections?
I think the best highlight for me was watching Madrid live.
You watched Real Madrid play at the Bernabeu.
Man, it was amazing, man. You know that song, Hala Madrid?
Yes.
Mate, I felt like I needed to learn those lyrics by heart.
Yeah.
It was amazing, man. The atmosphere was amazing. Obviously, quality, top football.
The football was always going to be quality. Yeah.
I felt like crying when I was sitting in that stand.
Jude Bellingham scored.
He did on the last minute.
Yeah.
And I anticipated the goal.
What do you mean?
I literally was like, this is the moment. And then the goal, literally, I'm like, this is the time.
Yeah.
And then, unfortunately, I didn't record that moment.
You didn't record it.
I was so bummed at myself, man.
I was looking at your pictures, and you took a picture when you were posing.
On the stand.
On the stand.
Behind the glass.
Yes.
Yeah.
How far were you actually? Because if you go, follow him on Instagram. But like, have a look at. Have a look at his picture. But like, how far were you from? Because it looks like you were quite far.
Yeah, I was quite far. I was in the stand.
Yes.
So. It's a very nice view because you get like the whole holistic view of the stadium and what's actually happening down there.
Yeah.
It was a nice seat.
Yeah.
The stadium itself, it's the way it's structured is very beautiful.
Yeah.
It's still relatively on its finishing touch. They're still doing some constructions and stuff like that. But I think it's probably gonna be by far the best stadium.
Really?
Yeah.
I mean, it's football heritage, isn't it? It really is for everybody that loves football.
And I mean, I've seen the Etihad Stadium, one of the best facilities that are in there. I've seen the Tottenham Space one, which also has the best facilities, but Bernabeu is far ahead.
Yeah, and also I'm all about the heritage. I see Etihad, I see the Tottenham Hotspur, but like. We talk about heritage. We speak about Old Trafford. We speak about the Bernabeu. We speak about the San Siro. That type of thing. But now, man, I think like putting on our investment and our economic hats on, your trip to Europe. I'm not sure if you had time to reflect. Any reflections economically and on the investment side? Did you learn anything new? Did you find out something that we should be finding out? I'm sure there are people that are following us, investors, that have invested some of their money overseas, particularly in Europe.
Yeah. The culture is definitely different. From here. In terms of how people actually shop. There's a lot of convenience stores in like maybe delving into specifically the retail industry. There's a
Yes.
lot of convenience stores in Europe versus like your big supermarkets and stuff like that. So even their shopping is more like, let's it's quick things, right? Essentials and stuff like that. They've got a lot of that around where they stay. You you typically have to travel a little bit to go get um to get access to like the bigger supermarkets and the likes. But yeah, it's just the culture of shopping is different. And you see it differently from different countries, because I was in London, which is in England, and
Yes.
then I was in Paris, France, and then Oslo and Madrid in Spain.
Mm.
So it's very different to pretty much all the different countries,
Yeah.
how they do their shopping.
Oh, like even in Europe itself.
Yes, even in Europe itself, it's slightly different.
Okay.
And obviously, it's also dependent on what they eat, right?
Mm.
Because I mean, in France, it's a lot of pastries,
Yeah.
croissants,
Yeah.
and the likes, and yeah, so it's different shopping like that. But what I've seen is that food is expensive.
Food is
It doesn't
expensive.
matter where you are.
Yeah.
Food is really expensive. It really doesn't matter where you are. Even the people in England.
Wait, is it expensive because you are coming in with South African rands?
No,
or
even
is
the
it...
people in there actually
Oh,
are
okay,
complaining.
okay. So
You
you're
know,
talking about the
it's
purchasing power parity.
yes,
Oh, okay.
it's actually very expensive
Ah.
everywhere. So I guess it makes sense because I mean we're in a high inflation environment
Yeah.
globally. It's not
Yeah.
just a South African thing or a European thing.
Yes.
It's across the board, right? So yeah, I think that's one of the highlights that I've seen, and very much less cash environment.
Less cash.
Yeah,
Very
that-
different to the African environment,
Yeah,
isn't
very
it?
different to the African environment where you've got a lot of informal sectors that
Yeah.
actually utilizes cash. But they're not much. Well, actually, I've been to Norway 4 times, right? But it was only on this trip that I got to see the cash, the real, like the paper money.
Like the currency.
Yeah, the paper money, the NOx. Yeah.
Wow.
I had never seen it
Hmm.
because people don't really use cash.
Hmm.
You know, it's a very cashless environment and shopping like that. Yeah.
Very interesting. Very interesting. Now, man, I'm very, very happy that you're back.
Yeah.
And
Yeah.
also to learn, I know, also off camera to learn about the things, but that you got up to in Europe. But I think most importantly, I'm just keen to see on the economic side what you learned. I had a little bit of exposure to European economists while you were away. So the South African Reserve Bank, they hosted the biennial conference, research conference.
Yes, I saw that you attended that.
Of course.
What were some of the key takeaways that you took from there?
Yeah, there was, I think tying it to this European subject that we are on, the chief economist of the Bank of England was there, Mr. Hugh Pill, and the themes were the same. What I learned, it was the first one: inflation is still high.
Yeah,
and the Bank of England, well, as per Mr. Hugh Pill, is that they are still very much dedicated to bringing inflation down.
Loosely translated, they're still going to raise interest rates.
Yeah, well, yeah,
that's pretty much what it means.
You know what? Yeah. Loosely translated, but the nuance goes into what sort of indicators are they looking at. So it's a battle between looking at inflation and inflation expectations as per the central bank, as they should. But also looking at a term which I recently learned, a concept which I recently learned, which is the R star. The R star, which markets really use that to build it into their pricing, particularly mortgage-backed assets. And whether a central bank, yes, having R star in the back of their mind, but still using inflation and inflation expectations to guide their thinking.
Yeah.
So my conclusion and my learning, my takeaway was that as much as how inflation is still high, inflation and inflation expectations is going down, as well as R star. And for those that don't know, R star is basically the neutral interest rates, where inflation, it's assumed that inflation is at target and the economy is on trend. So they kind of use that as a guiding light as to where interest rates will be. But that was my big takeaway. My big takeaway is that inflation and inflation expectations are going down. And in the South African terms, we saw CPI actually go down from June to July from, was it 5.4 to 4.7?
Yeah.
Which in our context is well in our target band of 3 and 6%. So that is good news for us.
Means that we managed to keep inflation.
They managed to
within our target.
Exactly, and that means for interest rates, I know people will be thanking God and about interest rates. I don't think they're gonna go up the next one. I don't.
I think speaking of the Bank of England, I was actually reading. I've subscribed to the Reuters newsletters. So I get newsletters in the morning. So on their European morning bid, they were saying that a lot of economists are actually expecting that the Bank of England will not increase interest rates in the next sitting.
Sure.
Pretty much the same for the
ECB.
ECB as well.
Yeah.
But however, a lot of investors are confident that high inflation and high interest rates are gonna remain for a little bit longer than what people think they're gonna be. So that's one of the interesting angle to look at it. That's how the market is thinking around it in the European context. But
it makes a lot of sense. I think what Governor Lesitsha Hayako, our governor of the South African Reserve Bank, said, just because you see swallows, it doesn't mean that summer's here. So the fact that interest rates could still remain high, I think it's the thoroughness of the central bank trying to keep inflation down. But as far as the future expectations of inflation, I think there is more than enough evidence that it is going down, which eventually, I mean, if monetary policy is data driven, it has to follow suit. But yeah, mate, that was some of the things that I learned in the Benio conference. There was many things. But
you're rubbing shoulders with the big people, man. Like,
bro,
look at you. Even me, I went to Europe, but I didn't rub shoulders with big people like
that. No. But it was just I felt out of my depth a bit. Like there were Harvard PhDs everywhere. And I was like, the only place where there are more Harvard PhDs is Harvard University than the Cape Town ICC. But I think, with that being said, mate, let us go straight into the portfolio check.
What did you do to my stocks when I was away?
It's not great. But I'll be keen to get your thoughts as to what is on earth is going on here.
Yeah.
I'm not going to be as dramatic as I usually when I do, but so I'll just go down the list.
Okay, cool.
So we have Anglo Platinum since the last episode, which is episode 6.
It's bloody.
It's terrible. Anglo is down 19.76%. Then we have British and American Tobacco, which is yours again. That has turned the corner. That is up in the green 2.01%.
Yeah.
Then we have Capitec, of which I'm going to get into a bit later.
Yeah.
That is up 10.57%. Capitec, which it has.
I can see that smile.
but there's some couple of drivers there of which I'm going to get into.
Okay.
And then we have Discovery. Discovery is down 0.16%.
Yeah.
Naspers. Yeah. All of my questions is Naspers related. Please don't ask me more Naspers questions. I beg you. 4.43%.
No, but I mean, it has reduced the losses, right? In the past few weeks that we've had Naspers in our portfolio, it was down double digits.
Yeah.
And right now, it has managed to come down to like a half single digit,
it's true.
Which is it's a step in the right direction, man.
It's true. And I think like this portfolio is actually teaching us on to walk the walk and not just to talk it.
Yeah.
Because we speak about not panicking and all that. So
Exactly.
we have no choice but to actually practice what we preach.
Yeah.
Sasol, they are down 4.95%. And then, as per the usual, our star performer has been ShopRite.
Of course.
With a gain of 12.89%.
Speaking of ShopRite, I mean, it's unfortunately, sadly, we've lost one of the retail giants, which is Mr. Raymond Ackerman.
Yeah.
So I guess it would be good to kind of delve down into a little bit about the retail sector, but let's speak about that a little bit later. So let's hear what's happening with Capitec. What's turned it around to be a beautiful performer.
You know what, there's nothing holistic, but something did happen on Friday. I think, you still in Europe on Friday?
Yeah.
So on Friday, they came out with a voluntary trading statement.
Yeah.
For the half-year trading period ending in August.
Yeah.
And it was good. It was good, but it seems like
some healthy numbers.
Any statement that has been released and announced by banks seems like it's all positive. But yeah, Capitec, it's no different. And on that Friday, there was about a 10% surge in the price of the share. So for those that have been paying attention, I said Capitec has gone up by 10%. And on that day, it was about 10%. So all of the gains were made on Friday. Yeah, but you know what? It's important to have a bit of perspective that from year to date. So yeah, from year to date, Capitec is still down by roughly about 11%.
Yeah.
But yeah, from the last time we shot episode 6 till now, it's gone up by 10%. So the trading statement, what did it contain in it that stimulated the market? There was earning growth estimation between 8% to 10%.
Okay.
And that was driven by net transaction fee income.
Yeah.
Transaction volumes have increased positively, and funeral plan income. Now, the trading statement, this is where companies, I think they can get creative with their English. Like high sales and customer retention, with funeral plans. Yeah, man, I also think that there's less death.
Capitec launched a life cover business.
Yeah.
Oh,
yeah, no, like the new products have done quite well. That has increased, obviously, the transaction volume.
So Capitec is actually becoming like a holistic competitor,
like for a competitor.
For the other big banks, like your Standard Bank and thingy, because Capitec didn't have a bank, now they do.
Yes.
They didn't have like the life business or the insurance component.
Yeah.
I see now they do. So you can see that they're slowly
funeral
becoming
plan as well.
One of the holistic bank that you can get from them.
Yeah.
So that's interesting.
We spoke about it though, in that the general direction of the new and improved Capitec. Well, okay, maybe let me not say new and improved, but the spruced up Capitec is that it's becoming more dynamic.
Yeah.
In that I think all of the organic growth from just retail banking, I think that road is slowly coming to an end or has come to an end. I'm not sure what your opinion is there.
I've seen big numbers, of course. I mean, I don't think we're going to see like a double-digit growth from that. I mean,
probably not. I think, there you just need to look at what, how much of the South African population is still underbanked or unbanked, and those numbers are decreasing. And Capitec largely has to do with that.
What's management's opinion about expanding to other African markets?
Great question. And that question, as a shareholder, and those who are Capitec shareholder, you've probably heard this question asked in the last 5 AGMs in a row. And the answer is still the same. Capitec is a data-driven bank. It will not go where the numbers don't make sense and where capabilities and expertise don't make sense. I mean, like, to go into Africa at the moment, you have to look at your company as well, the company that you have in the ShopRite.
Yeah.
In that it went in as a lone wolf because it was doing something quite new. But as a result, you have to make some mistakes there. And I don't think Capitec is about that. I think Capitec, there has to be a way forward. There has to be a clear direction. And I don't think they are on that direction of actually starting a new bank operation in a foreign country. Maybe the option of partnering with local players is there, but I don't think so.
Yeah, I mean, look, there's different ways on how you can do expansion, right? I mean, you can do it through M&A, mergers and acquisitions, or you can do it just by actually starting a new branch in there, like organically. So and I'm not even talking about some of the toughest markets like Nigeria
Sure.
and Sierra Leone and the
Yeah.
likes. No, I'm talking about, even in the SADC region, even in the Southern Africa region.
Yeah.
Capitec doesn't have one single operations even in Namibia, right?
But then you have to look at what their model is.
Even Lesotho, for example.
Or even Swaziland. But you got to look at their model in that Capitec is they still very much believe in bricks and mortar, meaning that they're going to have to build a branch, build ATMs. It's quite different from, like, let's say, for example, a discovery model, discovery bank model, where things are tech driven, software driven, that type of thing. And I think going into an African country with a bricks and mortar, okay, in fact, let me not use the word bricks and mortar because it sounds negative and ancient. but it has worked, bro.
Stores,
the physical branches, getting stuff like that on the ground now, I think it's a headache. I think it's something which I don't think it will work personally. And I think that the management of Capitec understands that very well. Unless if they're willing to change their business model just for further expansion to Africa, I don't think so. I don't think so. I could be wrong. I'm keen for other shareholders, Capitec shareholders, and those who are in the know of banks, to disagree with me, but I don't see it. Okay. And watch next AGM, same question is gonna come up again.
Why are we not expanding to Africa? I guess it makes sense. I'm not a shareholder at Capitec, so I'm not too concerned about it. But it makes sense.
Yeah. The last thing, in fact, before I should add, it's the last thing, and I think this is the one that actually caught the headlines for those who follow Capitec. It's the tightening of credit issuances. So that policy to issue out credit to everyday people, the trading statement even spoke about tightening those
really
controls. They did. And
I mean, how much further can you tighten that when you're dealing with the mass market? Because I mean, they're dealing with the lower end. They're not dealing with your Crystal Visa or your Nicom Giba. It's not the same.
You're quite right. And I think this was a move that was very much informed by the prevailing economic conditions in the form of high inflation and high interest rates. I think.
And before you move on, tightening, what does tightening mean?
Basically making it more stringent, putting another hoop for you to jump through before they can issue out a loan. Okay. It's a risk management strategy. Yes. They want to manage their risk and not exposing their loan book to too much, what do they call it?
Credit risk.
Credit, but there's a derogatory term. I'm sorry, I'm going to use it. It's called a ninja. No income, no job.
Okay.
Where they're trying to get away from issuing credit to people who the likelihood of actually paying it back are very, very small.
Okay.
And that was also further expanded by the prevailing inflationary conditions.
So they're minimizing the defaults.
That's basically it. Just keeping a tighter control on that loan book.
Okay.
But those were some of the numbers. Those were some of the news that came out of
Makes
Capitec.
sense. You sound very proud about Capitec, man. I can see the smile. I can see this guy smiling. Like, you're so proud of it. But okay. That makes sense.
Yeah.
I think for me, the bloody one is
it's
Anglo. Like I said, I said this was gonna be a patient game, right? It's a cyclical business. And there's a lot of uncertainty that's happening in the market that, like, I've reiterated this in the past few episodes. That the demand issues and some of the problems that we're facing, even from Transnet, which is one of the big issues that it's inhibiting exports for Anglo-Plat. So it's one of those businesses that you have to take
a
long-term
quickly
view
with
on
Transnet, because even some of the questions that we've been getting on Transnet. Most of our content in the previous weeks that was shared, it has to do with Transnet. Do you think that there's a solution here?
Do I think that there's a solution for solving issues with from Transnet? Yes, I think so. Unfortunately, you have to kind of lessen the political interference into some of the SOEs, right?
Yes.
But for instance, there is a lot of confusion even in the government as to how SOEs should be managed. Because right now you've got a minister of public enterprises, you've got a minister of energy. You've got, but Eskom doesn't fall under that, but also still reports. There's a lot of confusion on terms of what falls away. But I think I've read that they're doing away with the Ministry of Public Enterprises.
Where did you read that?
Somewhere. I think on the presidential newsletters or Cyril Ramaphosa's newsletters.
Yay!
So it seems that the SOEs are going state-owned entities. They're going to be under the different ministries that they should fall under. So for instance, Eskom is going to energy and minerals. Transnet will probably go to transport. And the like. So I think that's a step in the right direction, because public enterprises just didn't make sense to me, because it seems like a middleman in there, and there's other ministries that should directly supervise or oversight those different state-owned entities that falls under in that industry. So that didn't make sense to me. So you can see, I mean, they've been changing boards in left, right, and center.
You're right.
So I think that's one step in the right direction, right?
Yeah.
And then from there, if they can find a way to kind of limit the political interference in the direct SOEs, which will be very difficult, of course. But I think that's the one solution that if it is implemented,
is that the silver bullet?
Then it will be the silver bullet.
Yeah, I don't know. Like, as far as but actionable solutions, I think the one about redirecting management of the SOEs to its appropriate portfolio, ministry rather. I think that's more of a workable solution. The minimizing of political. I don't want to get too much political, but like the minimizing of the political interference, that needs already political will for you not to interfere.
Exactly.
Yeah. Oh, jeebus. Okay.
But yeah, it's one of those issues, and load shedding as well. It's still costing a lot of businesses out there. So it's still a problem in the mining sector as well. So
I read in an article, mate, sorry to interrupt. Yeah. I read in an article that Transnet was costing the South African economy about 1 billion rand.
Yeah, I can believe that.
Every day.
If you aggregate the cost of revenue or the cost of profits that is lost by business due to load shedding, I'm sure it probably is even.
It's even more than
that. Probably. Because think about this, right? Yeah. Think about this. Small businesses, for example, right? Most of them don't have alternative energy sources to actually keep their businesses running, right? It means that for that 4 hours of load shedding, that is probably twice a day during stage 6, it means that they've lost 8 hours of operations. You and I are employed to work 8 hours a day. In that return, multiply that by a month. That means those guys are actually not making any much money.
It's incredible. And like we hear stats coming out from Stats SA saying that our economy is growing at 0.6%. The Reserve Bank also came out with a similar figure. I think it was 0.7, 0.8. It's this.
It's a biggest cost, man. Yeah. It's making production very costly.
Yeah. Because
in order to produce during load shedding, you need to get alternative source of energy. And even I invest in renewable energy. Even renewable energy is not going to be the solution, because renewable energy, for instance, if you're using solar, which is mostly a lot of small businesses and a lot of shopping malls and the likes kind of use, I mean, you only produce energy in different times of the day. It's not consistent supply of that energy. Yeah. So you can imagine, unless if you have battery storage, and that is expensive, right? A solar project that has a battery in it, that's really expensive. I'm telling you, it's really expensive.
No, like guys, like believe him. He's in the space. He's in the space. So
you can imagine. It really pains me, man, when I see a lot of small businesses that are struggling to keep afloat just because of load shedding. And this is people's mistakes and greed that has resulted into this. I know I'm maybe getting a little bit emotional, but
but like it's so hard
but
not
it hurts,
to.
man.
It's so hard not
it
to.
It really is hurts because we've got 60% youth unemployment. And whilst people are trying to create a living out of small businesses, then someone who's supposed to be a custodian of our South African economy has costed us big time, and it becomes a very emotional issue, and we are personally affected on this.
We are, and like I can say, we're both trying our best not to get political, but it's very hard, and I think we are heading to an election. An election cycle is important to any given economy, and then cascades down to your investments because you're supposed to deploy your capital in this economy.
Exactly.
For me, anyone that's going to convince me that they can make a plan, or rather they can have a turnaround strategy, there's two things for me. Number one is load shedding. Okay. If there's no mention of load shedding, no way. Yeah. We can't be always hopping on about nationalizing the Reserve Bank, which is going to do nothing, and not speak about load shedding. And number two is Transnet. I think these two state-owned enterprises now are holding us hostage. And I think
Transnet, Eskom.
And Eskom.
Oh my goodness.
And it's painful. But I mean, like they even hosting. We are losing money from just putting on our shareholder cap back on.
Yeah.
And putting down our comrade back off. It's quite worrying. But yeah, mate, you were speaking about Anglo. Yeah.
Yeah, I was just saying that, there's a lot of global issues like demand issues and local South African issues, and obviously some internal issues as well. They've had some changes as well from a CEO, and also some of their what's this, a smelter
correct,
plant in Polokwane having some issues. So for me, it's a long-term bet on it. I believe these issues can be solved. I mean, it's not like Transnet is not going to be bailed out by the government. It will at some point.
Probably will.
So it's just a matter of time. And obviously right now, there's less confidence on what the turnaround is going to be. Yeah. But as you can see, the beating is across all the mining companies. It doesn't matter what you're exporting, because you need to export through Transnet. So
this is painful. Yo.
Because of that, all the mining share prices are like slashed. Yeah. They're probably like in the year to date or in the past 1 year alone, they're probably down on average 50%.
Yeah.
So that's losing 50% value of your business.
Yeah. Especially
that should not be taken lightly, man.
It shouldn't. It
really shouldn't be taken lightly, and particularly because it's issues outside of your control. It becomes a problem when, look, again, I'm going to get political, but it becomes a problem when government kind of extend its role to somebody else to play that role, right? Because right now it's kind of expected of private sector to kind of solve this problem. And that's not how it should be. Government should solve this problem because it's their responsibility.
It is.
When that 40% tax goes out of our income, I'm not saying I pay 40% because
he's telling us his income, his tax bracket.
But I'm just saying that when that 40% comes out of your, I mean, the highest tax bracket in South Africa is 45%.
45, yeah.
So you can imagine somebody else. Yes, you can imagine somebody else is losing 45% of their thing just to be told that no, we can't open the mall because there's no power. We can't sell you what because there's no power.
Can't.
You know what's actually funny? When I went to Kenya, I think about 2 months ago.
Yeah.
When I landed in Kenya, that was very funny. I landed in Kenya at the airport in Nairobi, and then just before I hop into the escalators, load shedding, bam. I'm like, did I bring load shedding to Kenya?
Yeah,
What's happening?
You did.
Like the whole airport just went dark.
Kenyan investors. It's him.
The whole airport just went dark. So I was like, Look, man, it's probably, there's similar issues out there, They don't have same load shedding issues like we have. I'm sure there was a power trip of some sort, but it was a trigger, I was having some PTSD,
Yeah, no, and I think also we shouldn't give those. I'm getting political again. We shouldn't give those whom we've entrusted to look after our country. We shouldn't give them a way out and give them comparables and say, "Hey, compare to this one, compare to that one, compare to that one." We have to look at ourselves here. We can't look out of the window before we look in the mirror.
Yeah,
and it has to be mentioned that this was an own goal, and we shot ourselves in the foot. It didn't happen because of economic. Yeah. Okay. In fact, let me stop here because now I'm thinking about certain instances in Parliament. I don't want to get far ahead of myself.
But nonetheless, let's talk about Mr. Raymond Ackerman, man.
Let's talk about
the man was a retail giant, man.
He was, man.
Have you read any of his biography or any of his? Did he even write books?
He has one book which is actually on display for those living in Cape Town. The Pick and Pay by Claremont. Yes, so they have the picture that I think I forget the name of it. But yeah, there was a book, a Raymond Ackerman book. I nearly said Raymond Reddington from the Blacklist. But yeah, Mr. Raymond Ackerman, man, passed away. Condolences to firstly the Ackerman family, the Pick and Pay family.
Yeah,
Mr. Peter Boone, who's the chief executive.
Yeah.
And the Pick and Pay shareholders, because that's our touching point with investors.
Yeah.
Anyone who has invested in Pick and Pay. I mean, surely, like we spoke up in this episode 1 about being in a place where good people are. I'm sure that there are people who historically have invested in Pick and Pay, not necessarily that they knew exactly how the model works, but because they trusted Mr. Raymond Ackerman.
I mean, it's the language of investing, right?
Yes.
You don't necessarily invest into the business.
Yeah,
that is secondary. You invest into the people that are leading the business.
100%.
And that is because those are the custodians of your money.
Yeah.
Before anything else,
it's people. I read about Mr. Raymond Ackerman in Whitey Besson's book. Whitey,
you're such a fan of Whitey Besson.
I'm a fan. I like ShopRite. Like, listen, I really, really do. I think it's epic. Yeah, no, they recently released their results.
It's such a shame, man, that Pick and Pay has not been actually doing that well.
I actually wanted to speak about
recent years. Yeah. It's really not been doing that well in recent years. I was actually reading about some of the changes that Mr. Boone wants to make in the business, because the business has been really struggling. Like, for instance, the net margins of Pick and Pay are the lowest in the whole retail sector, lower than Spar, which is completely.
It's crazy.
Spar is a complete franchise business.
Exactly.
And you'd expect Spar to have much less margins, but that's not it. And obviously, ShopRite is the good.
That's the antithesis of Spar.
Yeah, I mean, ShopRite has higher margins, almost double. Well, even sometimes double of Pick and Pay's margins. Because ShopRite can do 6% margins, and Pick and Pay barely does 3% margins. So you can imagine how difficult it is, to a point where Mr. Boone is offering some of the senior managers early retirement packages and kind of thinking of downsizing and all of that. However, I think one of the big things, the Boxer stores, right?
Boxer.
It's one of the very good businesses in terms of catering for the low market, right?
Yes. It competes with USave, yeah?
It competes with USave. So you see, Boxer has been doing very well, even though in the past, Pick and Pay has not really reported the numbers of boxes separately in terms of how the margin looks like and all of that.
Yeah.
But it's been doing well from all the conversations that I've had in the past with like Boxer management and stuff like that. And
Pick and Pay clothing.
They've got Pick and Pay clothing, but what they want to do is to roll out more stores of Boxers.
Okay.
They are opening about 4 or 5 stores a month. Because they wanted to double their footprint in order to compete with USave, right? Because obviously USave has more footprint than Boxer. So they're trying to cement their position in the lower end market or the mass market, as they describe it. So that's one of the strategies that they're doing, and kind of splitting the brand as well of Pick and Pay. I think there was going to be Pick and Pay Red, which is going to offer the essentials and just more of a convenience thing. Spar does this very well, especially particularly in Europe, because Spar South Africa owns like Spar Ireland, Spar Poland. I forgot the third European one.
Sure.
But it's one of those strategies that Mr. Bone is trying to implement. So let's see how it goes. I mean, you can only hope that it does well. But I mean, I think their liquor business is one of the best out there.
Pick and Pay Liquor.
Yeah, Pick and Pay Liquor is one of the best.
They're bright spots, bro. Like I think from your analysis, I think there are bright spots. It's not. Yeah. It's not all doom and gloom.
No, it's not like the business is gonna close shop tomorrow.
No, it's not that.
It's not. But they just need to cut costs, and unfortunately, to do that, they need to reduce some of the staff, right? And it's very tough to do that in South African context because
you've got trade unions to deal with.
Yeah, you've got trade unions to deal with. Number one, and number two, the labor laws in South Africa are one of the toughest in the world.
Tight, they're stringent.
It's not like in the US when you can just fire someone today and it's done. You know, here we've got protection. You got CCMA. You've got all those different things that you need to deal with. You've got trade unions on the other hand, that can literally shut down your operations completely.
Yeah.
So it's one of those difficult things that he's experiencing, but. We'll see if the turnaround strategy for Pick and Pay business to be more profitable will work.
I think getting back to profitability, yes, that is number one priority.
Yeah.
Getting back into profitability, that's number one.
And improving those margins because they're not looking good.
It's going to be in the form of improving margins. Now, whether that's going to be a change in business model, I think the jury's out as to going forward with the new stores. Are they going to be corporately owned? Are they going to be franchised owned?
No, the Boxer stores are
all corporate owned. And you can see that the performance in that they're quite telling, aren't they?
Yeah. But also it's because Boxer has separate management.
Boxer has a separate management as well.
Yeah.
So those people need a raise, and they need to be
It's not just it's not like integrated fully to be like, okay, let's manage it, get lost into the systems of Pick and Pay and stuff. It's still very much separately managed.
If it's not broke, don't fix it, bro.
Exactly. I think that was one of the good decisions that they made to kind of manage that business separately from Pick and Pay. And not have the Pick and Pay brand being immersed and mixed with the Boxer. Like you can see clearly the brand identity of Boxer. If you don't read enough, you wouldn't even think that Boxer is owned by Pick and Pay.
Yeah.
But
quite right.
But the other stuff like your Checkers, your ShopRite, that's very telling. You can see the branding and the likes like that. Even though, but they've done it very well. I mean, they've been able to replicate kind of the efficiency from the higher end to the lower market. That's ShopRite.
It's quite nice, and I think I like South Africa's retail space. Although there's lots of room to grow, especially in the e-commerce side. But I like where we are in that you can have different models as far as franchising or corporate-owned stores, and as far as managing it yourself, or even having some sort of a degree of separation between management of a store that you own. It's brilliant, bro. That it's vibrant and that it's. But I think I wanted to end off a thought in that getting to profitability is the first priority, I think, for Pick and Pay. But I think the second priority, which mustn't be left, is that as much as how looking to fix mistakes of the past, they must not lose sight of what's going on into the future. And that future for me is definitely e-commerce. It is still young. And I think for room for growth, to give Checkers 6060 a run for their money, they came out with their numbers, strong numbers. But the e-commerce sector, I mean, just in the general sense of retail, it's still about 5%. the playing field is open. I personally, and you won't find this, you find this as no surprise, but I like the partnership which they had with Mr. D.
Yeah.
So things like that. And I think going on and investing in the future of how the look and feel of Pick and Pay stores, particularly the premium brand, of what that looks like.
Yeah.
I think that's where Checkers has actually like done so well.
Yeah,
they've done so well. So for me, so I think to conclude it, I think getting back to profitability is one. More emphasis on e-commerce. And I think more investment when it comes to the look and feel of the higher markets or rather the upper markets Pick and Pay offering.
Yeah. No, it would be interesting to see how Mr. Boone turns the business around. I mean, there's a lot that needs to be done to catch up with the rest of the guys, right?
There's a lot.
But fun fact is, ShopRite is actually the youngest of the retailers.
That's a fact.
So you can imagine. I think also ShopRite grew both organically and
inorganically and through M&As.
Right? And I think they've been very good at integrating businesses, right, back into the ShopRite group. Something that other businesses have not been able to do well. We've seen with, for instance, Spar. We've seen with some of the businesses that they've bought outside of South Africa, in Europe particularly. They've not been really doing well. They're not really doing bad, but they're not doing as well as they thought they would. So for instance, they faced a lot of challenges in Poland. They've got this thing called retail loyalty. All right. So in South African context, Spar is a distribution business, right?
Yes.
So all the franchises are independent of the Spar. They just pay a franchise fee to actually operate the brand. However, they are not bound to actually buy from the Spar.
From actually Spar.
Yeah. So that's what they call retail loyalty, right? In South African context, you're not forced. But in Poland, because it was very difficult, they had to introduce a minimum retail loyalty.
Very interesting.
In order for retailers there to actually buy from the Spar brand. And because of that, they've lost some of the franchisees, right? They decided, no, we're not going to continue with the Spar brand. We'll go independently,
And they can.
It's a thing. I mean, they had to renegotiate some of the franchise agreements with the franchisors there. It was one of the difficult things. But if they're able, the nice thing about it is that if you're able to perform well in euro terms, then you're going to make a killing. If they're able to turn those businesses around and make them profitable as much as they want to be, and grow, say, a high single digit to a double digit in European markets, then we're talking some really good money.
Yeah, you are, but I'm saying, like, does the model lend itself to that to that being intuitive, because they don't own these stores.
Yeah, they don't own the stores.
So basically, trying to grab control and steering them in the right direction, doesn't that model itself lend itself to the exact opposite?
Not necessarily, because that's their operations, right? For instance, the guys in the operations the Spar model means that they don't have significant capex, so they can grow faster, right? But it means that they're growing their franchise fees, they're growing their retail loyalty, their distribution business, and all of the likes, because that's the business. Right. So if they're able to do that and do that efficiently, because a franchise model means that you have to be able to manage your costs very well. Right? Because you're not producing and selling and putting 100% markup on a product that you produced, right? You're literally just buying and putting in your shelf, in your distribution center, and put a slight markup and sell it to your customer.
No, that's true.
But you gotta have economies of scale in order to be able to do that, right? So that if they're able to do that in euro terms, and get that money translated back to the rands, that's some good money for shareholders.
It's good stuff for shareholders.
Yeah, it's really good stuff.
Nah, man, that's some good stuff. I like your retail analysis as always. I also have a fun fact
Mm.
on Mr. Raymond Ackerman.
Mm.
I actually wrote it down on my phone. I didn't type it out. So his first foray into retail was in 1946, the year after the Second World War ended. And the first shop that the first store or the first business he worked on was called Ackerman's.
Yeah, I actually read that. Yeah.
Ackerman's, the Ackerman's that we know, South Africa investors, the Ackerman's, that was started by his father, Gus Ackerman.
Yes.
And that's where he started. And after that, his next big role was when he became chief executive of Checkers.
Yes.
And that was in 1958. And that then in 1967, that's when he started Pick and Pay with 4 stores.
Yes.
Wadi Basson started with 8. Raymond Ackerman did it with 4. But like, I think I just wanted to touch on, it's a bit of a disappointment, a little bit, especially seeing what a legend has done with Pick and Pay to the position where Pick and Pay finds itself in. I'm not sure if you saw in the group. I've been sending you pictures of the different share movements of the different retailers
since 2000.
I maxed it out.
Oh, so since the beginning, they listed.
Since the IPO.
For Pick and Pay, probably about 1968, 1969, because they listed a year after.
Since it was max.
Yeah.
It was max, and it's quite telling.
So let's go through it. Like, what's the one that is winning, that has grown the share price by much and stuff like that?
And we're gonna show this. We're gonna show this here. But let me just go through it, and it'll be quite interesting. We're gonna put a visual aid.
Yeah.
So let's start off with Pick and Pay. In fact, Pick and Pay has about a market cap at the moment, as we speak, about 17 billion rand.
Yes.
17 billion rand. It sounds like a big number. It is not. It really isn't. We'll show you. We'll put it here.
Yeah.
17 billion rand, and this is the granddad of retailers. Then I have.
What's the max growth?
The max growth, and so as far as price is concerned.
Yeah, as far as price is concerned.
As far as price is concerned, I see it at around about 50. No, I'm lying. About 70.
70.
Rand a share.
Okay.
Yeah.
And then it started at?
It started at. Oh, I can't really check this. I can't really see where it checked it because I took a screenshot.
Okay.
But like, yeah. Let me just go through it.
Makes
before
sense.
You pepper me with questions.
What was that?
It was Pick and Pay.
Pick and Pay.
Well, Pick and Pay, market cap of about 17 billion. Market cap, it's what you get when it's a product of the price of the share and the number of shares in issue. You take that, the product, that's the market cap. It's basically the value,
market value of the
business. Market value of the business. Then we get Woolworths. Woolworths has got, it is a bit of a different business. But
60% clothing and 40%
40% food. Yes. Well, Woolies has about a market cap of about 71 billion. So that is significantly more than. But obviously, there's a slight difference in what the business does. Spar is a comparable. Is a direct competitor, and it has a market cap of about 18 billion, which is more than Pick and Pay.
And Woolies.
And Woolies, no, this is 18.
Yeah. How much is Woolies?
Woolies is 71.
Oh, okay.
Woolies is 71.
71 billion.
Yeah. Quite big. Quite big business.
Oh, well, it makes sense.
ShopRite Holdings. 150 billion rands.
Yes.
And I think this is so telling because Pick and Pay, it turned over 1 billion rand in 1999, and it finds itself with a market cap of 17 billion 24 years later. That is telling. Where ShopRite finds itself at 150. ShopRite is nearly 10 times bigger than Pick and Pay. Man, listen, Mr. Raymond Ackerman, I pray that his DNA is still lingering, strongly so, in the Pick and Pay, in the Pick and Pay company, in the business. But it hasn't been good enough. And we spoke about some of the things that that Mr. Boone is going to be focusing on, or what we would like to see him focus on.
Yeah.
But there's a lot of work to be done.
Yeah, there's a lot of work to be done. I think ShopRite has done a lot of aggressive growth, both M&As and growing businesses.
150, mate.
Yes, mate. I mean,
Yo.
if you have an aggressive strategy of growth, then it makes sense. I mean, Pick n Pay relaxed. You can't relax, and that's exactly what ShopRite is still doing until today. They've got higher margins, which means they can reinvest faster than the other retailers.
Correct.
And that means that they even acquire more growth than other retailers. Obviously, you can't do that to perpetuity, but that's what they're doing.
You can try your best.
That's what they're doing now. And that aggressive growth strategy has been winning a lot.
It has, mate. It has. And I think the thing of growth begets growth. And faster growth and scale begets faster growth and scale.
And you're not always going to get it right, unfortunately.
You're not, clearly.
But it's the L that you take and implement the opposite of what you needed to do.
And it's how quickly you do it. I think speed it's important.
Yeah.
Speed on how you like using the discovery philosophy of learning from your wins, but also using the ShopRite philosophy of learning quickly from your mistakes as well, such as Africa. Admitting your mistakes and moving on quickly.
Yes.
I think having the combining the both, I think the stars, you can reach for the stars.
Yeah.
I think not all hope is lost. I think for me to conclude on Pick n Pay, condolences once again to the Ackerman family. And I am wishing Mr. Peter Boone all the very best. I like Pick n Pay. I really, really do. But and it will be a shame to see it just fall away as it has. It has fallen away. 17 billion market cap is not good enough, but there's plenty of growth. For me, definitely more technology, more e-commerce, and better, obviously, cost management and getting back into profitability. Yeah.
Well, I think e-commerce should be secondary to them. I think they should focus on growing their mass market business, like rolling out the Boxer stores. I think that will be one of the winning strategies in terms of investing their capital. And then, of course, try to invest in the technology. But I think in terms of increasing your footprint, you need that first. You get that right, and then you definitely can move online as such. But that's just my opinion.
Yeah, no, this is where he says I'm the tech guy. And that's where you can tell the difference.
That's just my opinion.
Yeah.
But yeah, I mean, this has been a very interesting conversation centered around retailers. I mean, of course, it's because we've lost a retailer giant. But look, I covered in retail for quite a bit. It's very interesting industry to kind of learn.
I've learned about retail because of the Investment Candle podcast.
Really?
Yeah, that and also Whitey Basson's book.
Of course. Whitey Basson just has to be dropped somewhere.
No, he has to be. He really, really has to be. Yeah. And they're not sponsoring this, but I guess I really, really learned. But I think with this podcast, I've learned a lot about retail.
Yeah. No, that makes sense. But thank you very much for watching. Hit that like button, subscribe, and comment, and give us some questions.
And a thumbs
if you
up.
have questions. And yeah, until next time.
Yeah, mate. I heard that a thumbs up also it helps with the algorithm.
Really?
Yeah. Give us a thumbs up.
Okay.
Like by you supporting us, we are empowered to give you better content.
Yeah.
Guests. I know we are in the process of
getting guests. Yeah.
Big guests, big investors, big industry players. And we'll give you better stuff.
Yeah.
Support us, and then we will support you by giving you better stuff.
Okay. Fantastic. And love and peace from us.